Hello, hello. This is Cube here with Cube Scalps, and I just wanted to make this quick video because we missed Charles in chat this week. I was having a migraine the other day, but I feel better right now. And this video, I already did the analysis, right? And I wanted to make sure the I just wanted to make sure you guys get a little bit of the idea what I'm thinking or what I'm seeing over here. And this is a little bit of a larger time frame, larger outlook to get a little bit of sense of direction on this market. Um, just a couple of notes. I think it's been very choppy. I've been getting caught up in there, and you guys know how I use internals on my trading. So I think the market is very mixed because we have things that are bullish and things that are bearish. Just what happens is that since we're not rallying and we're slightly dropping because the things that are bearish, it's only one sector, and the sector is heavily weighted on the S&P, which is technology, 20 something percent, right? So if the Qs don't go, the SPY is not gonna go. So I have my little notes right here on the left, and I'm gonna post them later on Discord, so you guys follow. And I'm gonna start with the keynotes on a little bit of that. So this is information some of you already know, but I'll throw it out to you in case you missed it. So first of all, we got I hope you can read it because it's a small letters right here. But we have the bounce at the 50 retracement from COVID lows to all-time highs. So that means that if we take our fable from this low, roughly, to this all-time highs, we're roughly bouncing at the 50% retracement, which is very key level. You know, it's basically what you would call where a bull flag would have, you know, if you look at this, if this was a 5 minute chart or an hourly, whatever, you'd be looking at an entry around the 50% for the next leg up, right? So that's what's happening. Is a very key level, very nuanced level. And and we have to keep noting that that's what's happening at the moment, right? We're topping at the weekly 20 EMA. So what you see right now is a weekly chart on ES, and the top of this candle is no other than the 20 EMA. I don't think it's a. I mean, it is an indication. If you look at the past dips on this run up, it was a 20 EMA, but it is not all the time. You know, it may cross it, it may go back down. So it's not the greatest indication at all. It's just good to note that this is the top of this week right here, unless we go higher tomorrow, right? The last daily candle low, it was at the 20 EMA. So this trading session, you know that everything dropped at the end a lot more with the Amazon earnings. So we ended up dropping all the way and tagging the 20 EMA. So that's very bullish right there in itself, but we do have other bearish concerns, right? So that's what we have right here. It dropped on the Amazon earnings call out right here, and this is where it bounced at that low right there. Could have caught that bounce right there. It traded below the 50% retracement from the last leg up, but closed above it on the 618 is in play. All right. So the last leg up is this green candle, this 4 green candles right here. So I take my favorite perspective on that end because it was the first time from this point we started rallying upward, and we essentially traded down to the 50%, down to a daily 20, and trading below the 50, even though it bounced, puts the 618 in place. So I think if these in the future, if gets breached, and this gets breached right here, so 50% retracement and the 618, you'll be looking at a target of the and the 20 EMA, you'll be looking at a target of the 618 retracement right here for the shorts, right? And then try to pick up a long right here, or try to see if your short will pierce through, because once you trade below the 618, the odds are increased that you're gonna do a 100% retracement up to this low again, right? So that's what we're looking at. Another thing to note is that we did not reach the trend line. So it was one of my long targets that that I was trying to play the other day. I fell on a couple of my SPX calls to the upside because I use trend lines a lot, and it was just very close. I mean, the market was very close to it, and then it was like, to me, it was a matter of not if, but when, right? And whenever something doesn't reach and it actually sells before key target, something like this, you see this trend line right here. I take that as a little more bearish, so the selling came in before this, and I don't think really the market is not really paying attention to that. There's other nuances, which is the I think the keys and the cues. But it's worth noting that I mean this could have been the long target for a lot of people, including myself, and failure to get there. I mean it's just added selling pressure. It's just added selling pressure. Also, I forgot to put on my notes right here. We're just gonna put it right away. Um, uh, still above uptrend line. Still above uptrend line right here. So it all means that we do have a trend line off of this lows right here and off of this lows right here, and the and ES is still trading above it. So this is this pullback is still bullish until proven otherwise, right? Obviously on the ES analysis, right? So like we talk about, the 618 is in play, and then it's not the 100% retracement for this and whatnot. I forgot to put also another thing. We have one in the hourly candle head and shoulders, and we have a daily inverse head and shoulders. So I don't use shapes at all. I don't like shapes. It's not my thing because I mean the market is composed of something more significant than just shapes, right? But the shapes do help us recognize when something has changed trend. So you look at this on the hourly, we do see at the highs, that we're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. We reach a peak, and the next high is not a higher high, and the next low it's a lower low. So it's what you will spot, as your shoulders right here, and your peak right here, your head right here. So that places the neck around this area right here, which broke, and it already played out. The hourly already played out, being this right here. And I don't know if Phil's gonna retrace the whole thing up to this. If this is a whole what you call the shoulder or the arms, of the little guy right here. So I will put the target up to this right here. I mean, I like I said, I don't use shapes, but that will be the idea. And it's basically what you would call the 100% retracement, right? You lose the 618 that we talk about. We talk about this pumping up to here, right here. And if you lose the 618 right here, which will be this level, it's going to be very key. Lose the 6, so you're going to get over to 100% retracement right here. So it's something to note for, right? This we do have an inverse head and shoulders on the daily. I'm just gonna show you right now, right here. So basically, it's something bigger, right? And this will be your head right here. Like I said, we make a deeper low, but we start having a change of trend right there. It's I don't know. Somebody called it out, but I'm not so sure about it. But if this happens, Baker neckline was supposed to be this. That didn't happen. So it broke and it's traded below it. But this high will be in place if that happens, right? And then we watch for this trend line break. If we start trending higher, if the market wants to push higher, and this will be some kind of target that we will go for right here, this high right here, which is around 4170 or something, 4175. If the market was to head upwards, right? So we got that right there. So enough about me. Let's talk about you. Let's get rid of the ES and go for the NQ. So a lot of times, one of my phrases is the answer may be on the Qs, right? So we do have a. Let me show you the weekly real quick. Let me go through my notes real quick. So we have the first one, a bounce at the 618 retracement from COVID lows to all-time highs. So this is what we have right now. This is the COVID lows to all-time highs, and it drops to the 618, and the bounce was right there. So, ES hit the 50, and NQ hit the 618. So more bearish in itself that it dropped further into the retracement from this run up. But once both of them hit the key level, it was very technical the bounce, So we recognize that. We have relative weakness, so this is way weaker than the other sectors. We know that tech is weaker, and we have we're topping two daily candles at the 50 MA. So this was key on the last two trading sessions before today. That we were topping at the daily 50. So it's around 50% retracement, but this is not a level that you will use on the other side. This is only for a bounce back points, which it didn't bounce, and then now it bounced at the 618. So it's just noting, that this got this is where we're topping out, right? It's just it acts with it, but not so often. And it's just whenever it happens, you have to just put it on your notes, right? It happens, so when it reaches again and it breaks, it might be bullish or whatnot. So that's what happened. We have a broken trend line from the uptrend, so that's gonna be this trend line right here. This is my next note. So we do have a trend line right here. This is the uptrend, and we broke the candle and closed below it. This trading session with the Amazon earnings. So this is like if you were looking at ES earlier, right? Just had a run up like this, but instead is already did at 100% retracement, right? It lost the 618 and it retraced the whole area to 100% from the last leg up. That's what it did. So it broke the uptrend. So that indicates further bearishness into this. This is what it tells me that tech is looking to head lower after this. Yeah, it's looking to head lower. If it goes higher tomorrow, I would probably look for a short entry around the daily 20 and this trend line again, like a retest of that trend line. And we'll see, like it could just not go higher and keep dropping from here and see what's up. It retraced 100%. We went over that already from the last push higher. And right here, NQ historically bounced at the 50 MA on the monthly chart. Last month closed below it. Okay, so this is very important. Look at the monthly chart. We have the 50 MA. And if you look at the past, just like the COVID lows were at the 50 MA, and maybe not 2008, but and other instances we bounce from there, right? So if we bounce up from the COVID lows right here, you would expect it to bounce, and you see this monthly, it actually bounced at the 50 MA. But this last month, we did not, and we're trading below it again on this month. So we'll see if we close above it or not, reclaim it. But it looks like it won, right? Now the month is about to end, so we'll see what happens. So that's what we have right there. We also had a trend line on the daily right here that did not reach, just like ES, but just by a few points. But this one had the 50 MA on the daily at the high, so it's a little more understandable, I guess, on the technical perspective. Now, one of the reasons I wanted to point out that one of the reasons that we are chopping around a lot is because I believe there's a lot of stuff that is bullish, but tech is just a heavyweight, right? And one of the key notes, one of the clues of the market that is showing right now is that the Dow is actually held it up green today on the session. It is looking like it wants to exhaust right here and start turning around for a pullback. It could be a bullish pullback just like this, but it ended green on the day. Today ended green. That's not out of the question. So we know that some of the stocks, like XOM or that is at all-time highs, UNH, stuff like that is in the Dow. So there's a bullish market. Obviously, there's some bullishness out there, and the trading SPY, SPX is just a little harder right now because, like I said, it's just a push and pull between what's good and what's bullish and what's not. It's 500 stocks in it. This was only got 30, right? And it's a lot of different stuff on the S&Ps. So keynotes is close green versus all other indexes. It had a 13% bounce from the lows. Well, everything else had an 11% bounce. That's worth noting. This one dipped below pre-COVID highs and bounced. So if you look at this on the weekly, you'll notice this is a pre-COVID highs, and we actually dipped below. The other ones have not touched it, and it reclaimed it. So that's bullish in itself. And if you notice, it only pulled back 38 to the 38.2 retracement. So that's it indicates that the Dow is not that bearish. It did not pull it back that much, really, not even to the 50. But also, it's noticed that you can note that from the COVID run up to all time highs was way less amount of gains on the Dow than on the SPY or the Qs, right? So it kind of makes sense that it only pulled back to 32. The top of this candle is the daily 50 EMA. So we gotta, I mean, the weekly 50. We gotta watch out for that. And yeah, so that's all we have right here on the keynotes for the Dow. So like I said, this is just evidence that of the push and pull and the how is the market really between bull and bear, right? So here are some key levels that I have it right here on ES, I believe. Yeah, it's not here. It's in my other chart that is gonna look like a mess, just so you know. But just go down to a daily. I have a ton of levels right here. So keynotes that I have is that 20% decline from all-time highs. That indicates the technical level of bear market. So right now we're below it. The 2021 opening price, I keep it a lot because it's a level that acts a lot, and it just means that all the 2021 gains are erased at that point. Got the June low, the July low, and actually I should add the September low, right? August low. I just keep those lows because they've been very interesting. And they're coming up soon. We have the pre-COVID highs, which are way a little bit below to where we at right now, and the Fed retracements, right? We also have the NQ 20% decline from all-time highs right here, and the pre-COVID highs, which is right here. So we do have that, right? Always good to keep those levels because if we lose the 618, I think pre-COVID highs will be a nice target to the downside on the NQs to target all the shorts. And that's all I got. Just that's all I have. I don't know. I don't use stochastics a lot. Just a little note that the downside still has room to make it lower on the stochastics. To complete a cycle down. But that's all I have. That's all I have, and I hope that explains a little bit of a little bit of the how hard it is to trade a SPY at the moment because of the push and pull between sectors. But I hope it brings any good piece of information for you guys for your next trades. I'll see you around. Cube out. Hopefully you have a good lot of Friday. All right. Take care.